All right, everyone. So we've had an incredible rise in cryptocurrencies and especially Bitcoin since the start of 2024. And so many people do not actually understand the fundamental reasons of why cryptocurrency continues to go up in value. And if you're not understanding the three pillars that are causing Bitcoin to go up in value, it can be very difficult for you to invest, know when to come out of Bitcoin, and the key drivers pushing the price higher. So I'm going to teach you about interest rates in the bond market, and we're talking about the US 10-year government bond. What is the Federal Reserve doing with interest rates? The relationship between Bitcoin, stock markets, gold, and the 10-year government bond, which hardly anybody understands. And once you know this, your trading skills and understanding will go to a whole nother level. We're also going to talk about the halving of Bitcoins and the ETF demand, which is pushing the cryptocurrency up in the market. We've seen a big rally higher in the cryptocurrency, and I'm going to show you the results of my members. I just did a webinar to over 800 people, and you can see some of the results over here with Valerie, who made 18 grand trading Bitcoin alongside me. I had other members literally this morning send me profits of 1,000 euros, and literally just a few days before made 6,000 euros trading Bitcoin with me. So the members' results are phenomenal, and I want to educate you and show you what's going on. If you understand it, it's going to make a big difference to your trading. And then I'd like to invite you to come over to the Telegram channel. I've got thousands of people in there trading alongside me, educating themselves. So come and get involved if you're interested, but really understand the three main pillars. And I promise you, once you learn this, game changer. Okay, let's have a look at the webinar I just finished, and you can learn more information on it. All right, by the end of this webinar, guys, you guys are going to have a deep fundamental understanding for why Bitcoin has just been surging in price, okay? I'm really going to break down fundamentally what's been going on so you can understand it. You can invest it by yourself if you want to. You want to come trade it with me. It's totally up to you what you do. All I want to make sure that is at the end of today's webinar, you understand what the hell is going on with Bitcoin, because look, guys, if you want to invest in Bitcoin, you're going to make big returns. But if you want to buy the smaller cryptocurrencies that you can buy for like 12 pence or something that may go up to £2-3, you'll make a big return on your money. Okay, so there's plenty of opportunities. Now, the most important thing is we need to break down what's been going on. I'm going to talk to you about three main pillars, which I was talking about with Bitcoin that's been causing it to go up in value. Okay, lower interest rates. I've explained to you about the bond market, how that affects stocks and crypto, that if you didn't know are now moving at exactly the same time, and I'll break this down for you. We're then going to look at something called the ETF demand, which is causing institutional money to now come into cryptocurrency for the first time, which would be very exciting because if crypto has been going up aggressively over the past 10 years without this money, now that this money is coming into the cryptocurrency, they're expecting the fucking coins to go through the roof, okay? And then we got the Bitcoin halving, which I'll explain. All right, members. So it's going to be a really good webinar. I'm not going to hold you for long, or we'll literally be done in like fucking 15 minutes or so. Okay. But if you remember what I'm going to tell you, honestly, it will have a big impact on your life. If you're going to invest, listen, it could be an amazing opportunity for you to make millions if you're going to buy smaller coins, or if you want to make some more safer returns in Bitcoin, you can still make a lot of money. Okay. Because this thing is expected to just keep going high aggressively, especially when interest rates go down, which is yet to happen. And we're going to explain the impact this is going to have. Okay, so lower interest rate expectations. Interest rates are a key driver for stock markets historically, going back in history. And now that stocks and crypto move at the same time, you're now seeing it play out in the crypto markets. Okay, so the markets are expecting lower interest rates by the Federal Reserve, which is the US central bank. Why is it so important? Because the US central bank is the Federal Reserve central bank of the world, because the dollar is the world's reserve currency, which basically means as interest payments go down in the United States, the world's largest economy is going to have more money being printed, okay? And money is going to be coming in circulation, and other central banks around the world are going to follow the Federal Reserve and cut interest rates. So think about it logically, okay? As interest payments go down on your mortgages, your credit cards, your car loans, your student debt, your personal loans, everybody has more money to spend. And that has a direct impact on the value of crypto and stocks, because if people have more money to spend, what are they going to do? They're going to put their money in Bitcoin, okay? And I'm going to show you now how, if you look at the interest rate on a 10-year government bond, which is very, very important to understand, because interest payments on your mortgage, your car loans, your student debt, your personal loans, these interest payments are pegged at a premium to the 10-year government bond, okay? And I'm going to prove it to you, and I'm going to show you how Bitcoin has been moving in inverse correlation to the bond market. And when I show you this on top of each other with stocks and crypto moving at the same time, it's going to spark a fucking light bulb in your mind to go, wow, I never understood that. Okay, so sit back and enjoy this while I educate you on interest rates and how it really does affect assets across the world, but especially in stock markets and Bitcoin. So all I want to do is give you a bit of history. As you know, after COVID, inflation went through the roof. I'm sure you know that. Energy bills went up. Okay, everything was becoming more expensive. And then on the flip side, we had the war in Ukraine between Russia and Ukraine. And we know energy prices went up even more. So there was a big inflation problem around the world. And central banks had to tighten interest rates to bring down prices to try to get inflation under control. So let me play this picture out for you. Central banks around the world, being led by the Federal Reserve, started to raise interest rates in 2022. I will show you the Federal Reserve first raised interest rates in March 2022. Here, you can see it went from 0.25% up to 0.5%. That was the interest rate in the United States. All the other central banks started to follow the Federal Reserve, okay? So remember what I said. The 10-year government bond is obviously an interest rate if you borrow money to the US government over 10 years. But all the interest payments I just told you about, mortgages, credit cards, car loans, student debt, these interest payments are pegged at a premium to the 10-year government bond, because if you borrow money to the government, it's the safest place to park your money. If you want to borrow money, if a bank wants to borrow money to you, they have to borrow it to you at a premium interest rate, okay? Or if a bank wants to borrow money from investors or any company, they have to offer you more interest than a 10-year government bond, because you'd be like, why would I buy your bond? I'll just buy a government bond. I know my money's safe. So what happened is this: when interest rates went up in March 2022, you started to see the interest rate on 10-year government bonds, okay? Can you see around here? Look, the interest rate was paying 1.62%. You can see it on the right-hand side just here. The interest rate started to go up. Look at Bitcoin's price. So now you can understand how this works together. As the interest rate started to rise around this period here, look at Bitcoin's price. It was at the previous high, which it only just broke this week, last week, okay? The last 5 days. This was the previous high of Bitcoin, okay? Now, the reason Bitcoin went up so aggressively was because interest rates were very low coming out of COVID, because central banks needed everyone to spend money. They cut interest rates, so Bitcoin went up in value, but inflation got out of control. If you look in 2022, where inflation was in the United States, it was at that time 8%. Central banks have a 2% inflation target. They had to get inflation back down to 2%. So what do? They raise interest rates. Why? Your mortgage payments go up, credit card payments go up, car loan payments go up, student debt payments go up. Everybody's spending starts to be reduced because their interest payments monthly are increasing. So what happened to Bitcoin straight away? Well, have a look. Soon as the interest payments on government bonds were going up, your mortgage payments were going up, car loan payments were going up. Look what happened to Bitcoin at exactly the same time. Bitcoin's price tumbled, look, as interest rates kept moving higher. And you can see Bitcoin's price on the right-hand side. We had a huge slump in Bitcoin's price. It dropped by 80%. Can you see this huge drop in Bitcoin's price? Yeah, you see that? Now notice something really interesting. What happened in the US stock market at exactly the same time? No surprise, when did the US stock market start to fall? At exactly the same time. Look, as the interest payments on the government bond increased, so did the stock market. Why did the stock market and crypto fall at exactly the same time? Because think about what I just explained to you. As soon as the interest payments on everyone's debt was going up, investors already knew they're not going to be spending money in the economy as much as they were previously. So companies in the stock market are not going to earn as much profit. So what do? They sell stocks. Investors knew that the demand for Bitcoin was going to go down, so they sold Bitcoin. That's why you see stock markets go down at exactly the same time as stock markets. But notice something interesting. Stock markets bottomed in October. You can see they stopped falling in October. No surprise, look at Bitcoin. It stopped falling at exactly the same time. Why? Because at that time, you can see in the United States that inflation had then fallen for 3 months in a row. Now, traders, they always look at data for 3 months to see if there's a trend starting. So when inflation had peaked in July and by October, it had gone down from 9% to 8.2%, the markets were predicting interest rate cuts at that time. And you can see when the markets were predicting interest rate cuts, look what happened to the 10-year government bond. The interest rate on that government bond at that time peaked in October. Can you see? The market started to price in interest rate cuts. So the interest payments on government bonds went down. So what happened to everyone's mortgage payments, credit card payments, car loan payments, student debt payments? They all started to decline at the same time. So what do investors look at straight away? Now is the time to buy Bitcoin, because if they're predicting interest rate cuts to happen, what's going to happen? The demand for Bitcoin is going to increase, right? So look, you see this period here? Notice how Bitcoin starts to rise as soon as the interest rate on a 10-year government bond starts to go down. Bitcoin's price goes up by exactly 100% as the interest rate on government bonds start to decline. Look, you see this period here? Bitcoin's price goes up by 100%, right? But notice something. You see how the stock markets did exactly the same thing. Stock markets started to rise at exactly the same time. Look, stock markets went up as Bitcoin went up. Stocks only went up 30%. Bitcoin went up 100%, right? Then notice something. Can you see how Bitcoin then starts to decline at exactly the same time as the stock market starts to decline? Why? Let's go back to the bond market. The bond market will always tell you what's happening with Bitcoin and stocks because interest rates drive people's spending. Remember what I'm telling you guys. This is so important to remember, okay? Because look, so we had this period here where the interest rate on government bonds was declining, and then crypto rallied higher by 100%. But then what happened? The markets got it wrong because inflation didn't actually start to fall as quickly as they were predicting. So the markets realized that the Federal Reserve wasn't going to cut interest rates as quickly as they were predicting. So the bond market started to price in more interest rate increases. And look what happened. Soon as the bond market started to rise again with the interest rate, look what happened. Crypto went down at exactly the same time. Can you see? And then look what happened. As soon as interest rates peaked, Bitcoin stopped falling. You see? And it's exactly the same for the stock markets. Okay. If I show you, you can see this play out so beautifully. Bitcoin dropped here, so did the stock markets. Stock markets bottomed, so did Bitcoin. Why did they both bottom? Because the interest rate in a 10-year government bond had peaked. And then at this moment in time, because inflation is coming down sharply towards the central bank's 2% rate, the markets currently are pricing in interest rate cuts in the United States. So the interest rate expectations are for interest rates to go from 5.5%, and by the end of the year, they're going to go down to 4.5%. This is what the markets are predicting. These are all the meetings of the central bank throughout the year. So by the end of the year, rates are going down. So what does that mean? That the interest payments of everybody in the US are going to go down. So as we can see over here, that's why the bond market has peaked and started to come down. But look what happened. The moment the interest payments on the 10-year government bond starts to decline, Bitcoin, boom, takes off at exactly the same time. Look, you can see it. Can you see these moves, guys? How it happens, how it plays out? Notice again, just to show you how beautifully correlated this is. Soon as the interest rates went up again during this period of time here, look, this little spike up here. Look what happened to the Bitcoin. Went down at exactly the same time. Okay. And now the bond market is rolling over. The markets are predicting rate cuts even more. And you're seeing again, Bitcoin going up. So all you need to remember, guys, this is super easy to understand. The markets are predicting interest rate cuts by the US central bank, which means the 10-year government bond interest rate is going to go down because the 10-year government interest rate is following the market's expectation of what the central bank is going to do. Okay. The markets are predicting rate cuts. Mortgages, credit cards, car loans, student debt payments, they're all going to decrease. What's going to happen to the demand of Bitcoin? It's going to go up. That's why stocks and Bitcoin are going up at exactly the same time. Now you understand You want to invest in stocks, you want to invest in crypto, you have to understand what are going on with interest rates in the United States, because the US dollar is the world's reserve currency and global central banks follow the US central bank with their interest rate policy. Okay, don't believe me? Let's have a look at what the markets are expecting. They're expecting interest rate cuts in the next year from the Reserve Bank of Australia. They're expecting interest rate cuts in Europe, aggressive interest rate cuts in Europe. The Bank of England is expected to cut interest rates. Okay. The Bank of Canada. So now think about this. All these central banks around the world are all cutting interest rates. So every single person in all these countries who have debt, all their debt payments are going down. So what the fuck do you think is going to happen with Bitcoin? The demand is going to increase for Bitcoin because people have more money to spend. All right. Let's say you have a mortgage and your mortgage payments are £1,000 a month. Now that goes down to £600 a month. You got £400 more to spend. And now you turn on the news and you hear Bitcoin going up, all-time highs, all-time highs. What do you think happens? People start to try to jump on the bandwagon. Now you understand interest rates, key driver for Bitcoin. That's the first very important reason you have now seen how crypto moves in line with the market's prediction of where interest rates are going. And you need to always understand what's happening with the 10-year government interest rate in the United States to understand what the hell's going on with Bitcoin. Because I've just shown you in real time exactly whatever happens to the 10-year government interest rate is affecting directly what happens to Bitcoin and the stock markets, because crypto and stocks move at exactly the same time. And I've just shown you that by correlating the two. Okay, so again, just look how beautiful correlated the two are. They fall together. Okay, they go down together, they rise together. They fall together, they rise together. Okay, but notice something. How much does crypto go up? So look, crypto's now gone up 345% since the bottom in October. Stock markets have gone up 50%. So if you invested 10 grand in Bitcoin, you'd now have £34,000. If you invested 10 grand in the stock markets, you'd have £15,000. So you kind of see where everyone's trying to put their money, right? Clearly, Bitcoin, you get a much faster return on your money. Okay. So that's the first reason why crypto is going up, lower interest rates. Okay. Now, the second reason we need to understand is Bitcoin ETF demand. So Bitcoin for many, many years has never been able to be traded by institutional money. And I'm talking pension funds. The biggest investment banks and institutions in the United States have stayed clear of Bitcoin. Now, why do you think? Well, think about it. You heard what happened to FTX, that crypto exchange that went bust because that guy who owned it was gambling their money. People lost billions. People lost their savings. And because it's not regulated, whatever they lost is gone. They can't get it back, right? So institutional money has been very clear of Bitcoin. They're like, look, we're not putting our money here. These are people's pensions. We can't invest in this cryptocurrency. We're not putting our money on no exchange. But ETFs is a vehicle, okay, that allows you to invest in an asset like Bitcoin without actually having to buy Bitcoin. Okay, so I'll explain to you how it works. So the US Securities and Exchange Commission decision to approve an ETF that invests directly into Bitcoin has brought a new wave of investors into the cryptocurrency. Now, the ETF market is a $7 trillion industry, okay? So you got companies like BlackRock. BlackRock is one of the biggest investment firms in the United States. Look how big this company is. They invest $10 trillion worth of assets for investors. 10 trillion, one company. This is one of the most trusted companies in the United States. They have created their own ETF, and now companies like BlackRock are basically going and buying the cryptocurrency themselves, and then they created an ETF, which is basically like shares that you can buy off this company, and the shares track the price of Bitcoin. So if Bitcoin goes up 50%, the shares go up 50%. But nobody has to actually buy Bitcoin themselves and hold their money in exchange like Binance or Coinbase or FTX, which they're very nervous about. But they can now do it with these companies like BlackRock. The biggest institutions in the world, $10 trillion. So now you've got this wave of money coming into cryptocurrency that has been on the sidelines for many, many years. So when you've seen Bitcoin going up over the years, okay, when you've seen this huge march higher in Bitcoin for years and years and years, going back to 2012, okay, look, how far has Bitcoin gone back since it came into, we can see Bitcoin's much higher since 2012. Look how much it's gone up in value. I think it's gone up in value by 12,000%. If we look at the March higher since Bitcoin came into existence, well, it came in 2007, but look, we can see Bitcoin's gone up by 12,000%. This was the previous high, okay? Now, guys, literally think about this. Bitcoin's gone up by 12,000%, right? With no institutional money. $7 trillion worth of money has stayed out of Bitcoin, but now there's a vehicle to come into Bitcoin for this market. Okay, you can see here in this article on Bloomberg, the US spot ETF are shaking up the market for the original cryptocurrency after widening demand for the token. It's attracted more than $7 billion in net assets in less than 2 months. In 8 weeks, $7 billion comes straight into Bitcoin because now these funds, and remember, pension funds, institutional investors, you don't think they want to invest in something that goes up by 300% compared to the stock market. Remember, historically, people have got wealthy off stocks. Now they're looking at something that goes up by 350% compared to 50%. Imagine you put $1 billion in there and now you've got 3.5 billion, what, in 12 months? So now think how much money is going to come into crypto because of this new ETF. This is what's changing the world of cryptocurrency. Why spot Bitcoin ETF took forever and become an instant hit. This is the headlines. Because institutional money can now get into crypto in a safe way. Because they didn't want to buy Coinbase, they didn't want to buy Binance, they didn't want to buy ETF, but now they can do it through BlackRock, the biggest institutional in the United States. Now there's big institutional money coming into crypto. And it's only just started. It's only just trickling in. But what do you think is going to happen when crypto keeps marching higher? You know, everyone gets FOMO. The more crypto keeps going up, the more investors are going to say, fuck it, I want a piece of this. I want to put my money into crypto. It keeps going up. Stocks are only going up 10, 20%. This shit's up 50% already. Look how much crypto's already up this year in 2024. Look at the returns in 2024 for investors. You're looking at returns for investors of 60%. We're 3 months into the year. How much the stock market's gone up in that same period of time? Just the beginning of the year. Stock market up 9%. Guys, look at the difference. So this institutional money is really going to come into crypto at a fast pace. And this means that demand for the currency is going to rapidly increase. Okay? That's what's happening. Okay? So these funds are going to systematically change how much demands come in because crypto's been going up for years. And all these trillions of dollars hasn't even invested in it. So you got a huge money coming to Bitcoin as you've got interest rates going down. You got a recipe for higher prices. Can you see the momentum that's going to start building? Which, well, I don't know if it's going to continue to build, but this is the expectation. And that's why so much money is flooding into the cryptocurrency. Third, but not least, we have the Bitcoin halving. So Bitcoin is generated, I don't know if you know this, by miners whose computers perform complex calculations to validate the transactions on the blockchain, okay? Remember, cryptocurrency is decentralized. That's why they can't ban crypto. You can't outlaw crypto because nobody owns it. A central bank, a government can't shut it down. It will always be there. The guy who invented it was a fucking genius, okay? Now, these computers, anyone can buy a computer and try to solve these equations, are rewarded for validating the transactions on the blockchain. That's why crypto can't be hacked. The transactions can't be manipulated. Like once there's a transaction, it's on the blockchain, it can never be deleted, okay? And these miners are rewarded with a certain amount of coins when they basically complete a certain amount of transactions. I think it's like 20,000 transactions they have to calculate, right? So, for an example, the halving now means that these miners are going to be rewarded with half of the amount of coins they were previously rewarded. Okay. So look, in 2009, miners used to receive 50 Bitcoins per block. A block is like a certain amount of transactions they have to validate. Okay. Then it was reduced to 25 in 2012, and then 12.5 in 2016. The last halving was in 2020, and now it's going to drop to 3 coins. Okay, so it went from in 2009 to get 50 coins for validating the transactions. Now you get 3 coins. Bitcoin is going to be capped at 21 million coins. Once it hits 21 million coins, there will never be any more Bitcoins mined. So think about it, guys. Supply and demand. You're going to have huge demand for Bitcoin coming at this moment in time because you got trillions of dollars that are likely to move into Bitcoin because it's an asset class that investors cannot ignore. Whilst interest rates are going down, so people are going to be investing into crypto, and the supply of crypto is now being reduced. So you've got huge demand, low supply. What happens in anything where you've got high demand and low supply? Prices go up. If you're a sought after musician and everyone wants to book you, your booking price goes up because you're in demand. It's with anything in the marketplace, okay? This is why crypto has the 3 main pillars to keep going up in value. So, look, I've been invested in crypto. I've been showing you the results in the channels. You've seen my members like Valerie, beautiful woman, £18,000 profit following the Bitcoin trades. We've had this member, she sent me her screenshots. That Bitcoin trade was crazy. Thank you so much. She made £7,800. Amber, she made 19K on her Bitcoin trades. Unreal, Amber, happy for you. Kapil, one of the other members, made £16,500 on his trades. Adam made £6,700. Guys, these members are making a fucking fortune. They all started with like £250. 250 into 19 grand. You see the power of the group, right? That's what we're doing. We're investing. Some members make £1,000. It's all down to their risk tolerance, how risky they want to invest, okay? So, guys, do something. Don't ever watch this webinar and not do nothing. Otherwise, you're going to be the idiot that watches everybody else get rich and you just sit at home and you just cry about not having any money. If you want to do it with me and the members, you'll get a 30-day trial. Come and invest. You open your own trading account. You don't give me your login details. You don't pay me any money out of your profits. You get a 30-day trial. If you want to come and trade it after 30 days, you can pay the monthly membership fee. That's it. But your profits will completely outpay what you're paying me for the service. Okay, guys? If you don't want to use me, no problem. Go and do it yourself. Go and buy a Binance account or whatever you want to do, but your returns won't be as big as these guys because they're using leverage and you can get bigger returns, okay? So this is what's going on. It's a powerful time to be investing. If you can get in now, you're going to make a lot of money if crypto just keeps doing what it's been doing and the returns keep going up. Last year, crypto went up. And remember this, crypto went up last year, I think by 180%. Let me just get that right for a second. 2023, where are we starting from? Okay, here. Last year, crypto went up by 160%, right? Remember I showed you why crypto went up last year. Why? Remember from October, I told you the bond market started to decline, right? Remember, guys, the interest rate cuts haven't even happened. They've only just started to get priced in. So in this bond yield interest rate, when the interest rates and government bonds keep declining, where do you think crypto's going? Up. So we may see 200% returns, 300% returns this year. I've shown you where bond markets drive the currency, cryptocurrency with stocks, and bond markets are predicting rate cuts. You see what I'm saying, guys? So look, if you want to come trade with me, I'll be happy to have you come on board. If you don't want to trade with me, do it how you want to do it. Just do something. All right, guys. So I hope you've enjoyed this. I will put this on my YouTube. But look, guys, man, powerful time to start investing, okay? I hope this added value to you guys. Message my team. Come get involved. Come trade with us. Get educated. Learn something new for yourself. Don't sit at home and not do something. Learn something new. Expand your mind. Open your fucking mindset to something different. All right, guys? Peace and love. I look forward to hearing from all of you. I hope this added value. And I'll see you guys soon.